To be here with our road warrior, Karl Dakin, who's in Texas investigating dinosaur opportunities. And so pleased to be here again. We typically focus on financing, primarily business financing. Today, the word of the day is planning because that has a lot to do with about everything. And chat's wide open. We always respect your comments and helps us direct our conversations and hopefully create some very valuable takeaways that you can apply right after the show. So with that said, I want to turn it over to Karl Dakin, who's been a cohort of mine. We have a collaboration group, meets every other Thursday among live streamers to share knowledge and support each other. And also have a great opportunity if you're looking to do live streaming. I can talk to you about how we can take it to the next level. With that, Karl, why don't you reintroduce yourself and share your thoughts on planning?
Sure. Good morning, everyone. Thanks, Don, for having me on the show. As Don mentioned, my work is primarily in assisting small businesses and community projects in raising funding, and I work with all kinds of funding in all kinds of combinations, capital stacks, and usually I'm working with a small business that's in startup with new technology, or I am working with a company that has stabilized its startup and is now launching into a high growth type of a structure, or somewhere in between in case we can't tell the difference. And I'm in Texas this week on a project to create a theme park using animatronic dinosaurs. And I'm talking with different people about where to place a park like this, which is part of the planning process. And looking for a site, whenever you start a business, a lot of people just start it because it's in their backyard, and they don't give that much thought to the fact that if it were 2 miles east or 2,000 miles south, it might be in a better location that not only would give it a higher chance of success, but would help it be all it wants to be. So in picking a site for a theme park, there are a number of things on the checklist that I'm going through here, such as location to population, whether it's a family destination, temperature, so the number of days that the park would be open during the year. These are all elements of a very specific type of business, but these are all planning elements that one has to look at when one's trying to start or grow a business, because sometimes location is what it's all about. So I had the pleasure yesterday of visiting Long Neck Manor in Fredericksburg, Texas, which is a private animal reserve for giraffes and rhinos. And so if you look at my daily instant funding newsletter from yesterday, you'll see me feeding a giraffe over my shoulder. And it's one of those memorable events that I get to have from moment to moment as I work through different companies trying to raise money. So with that, planning, raising money without planning is almost impossible to understand. It's necessary to know your business, know your customer, know all these different things that are there before you can talk to and pitch an investor intelligently and meaningfully to get them to hear you, listen to you, and want to support you in what you're doing. So you have the planning of your business, and on top of that, then you have the planning of your capital campaign. And done correctly, you are going to be saying the right thing to the right person that gets you the funding you're looking for.
Yeah, well, that's so interesting. And you know what I admire most about Karl is he is open to so many new ideas and different varieties of ideas. So I know in financing, some people stick with one thing or a couple things and just focus on it. The other thing I believe with planning is, there's a saying, fail to plan to fail. And sometimes that makes sense. On the other extreme, there's Hewlett Packard that started with a plan on a napkin, and that was all they needed. At least, I guess it was a concept on a napkin or an idea. It wasn't a full-fledged plan. But I think that's where it starts from, is a thought, is an idea. Once you can write that down, and there's magic to the written word, because you have to see it, you have to write it, you have to look at it, and that gives it power. And the other thing, in your mind can be a little confusing when you keep everything up there. When you put it on paper, it's a starting point, right? And from there, you get subcategories, and some plans are always in the planning stages, and maybe that's the fun of the planning itself. And others go to market, and others wait for the plan to come together, because in most cases, you get 40%, 60%, or you have certain proficiencies, and now you're having a gap there. How do you fill it up to make it as comprehensive and as effective as possible before you show it to someone? And that'll impact the plan also based on response. But with that said, the plan is to introduce some quality people who are here today. Omar's here. Omar's been a regular. Omar will be coming back as a guest. I always support people who support us. So thank you so much, Omar. I always pitch Omar's Zoom party and other shows that he does live streaming. So congratulations, Omar, for doing what you do, and take an opportunity to get to know Omar. Kerry's here. Kerry wouldn't be here if he didn't take a joke with him. And his joke of the day was Cookie Monster was at Best Buy, since he said his laptop wanted him to delete cookies. Well, one thing, it's always G-rated, so I'm never embarrassed to put a joke up from Kerry. Kelly's here, and whenever Kelly's here, it's always a brighter day and a better day. I've been doing shows with Kelly for about 1.5 years, probably over 120 or so, lost count. Kelly also does the Awesome Journey with Christy Howard, and is part of our cohort group that meets every other Thursday, and we'll be meeting this week. So thank you so much, Kelly, for being here and all the support you bring to so many. And moving back to, planning, especially as it relates to financing, now you've got numbers, just not concepts that have to be involved, right? So how do you really put together the best package possible, Karl?
Well, the concepts, everybody has concepts or ideas. The statement, the concept or the idea is worth nothing because there's a gazillion of them is so true, because the ability to realize the value of the idea is a lot of work yet down the road. I talk about advancing ideas into a business model, which I talked about last week in my newsletter quite a bit, which is just trying to understand the fundamental reason how you do something that's going to make money by selling a product or service. And once you have that basic understanding that, yes, this might be of enough value, then you have to write a recipe for making that product or service. It's like baking a cake. You don't just throw a bunch of stuff in the bowl randomly and then throw it in the oven, or forget to throw it in the oven and hope that something good is going to happen. You need to have it written out as a process, a step-by-step instruction set. And it has to be clear enough for you, as well as everyone you're working with, to be able to understand their role, their responsibility for doing any particular task. And in that, then, if your team is fully briefed and understands their roles, and you have all the right capabilities to perform this recipe, then that becomes your business plan. That is your book, how you're going to conduct yourself. And all too often, entrepreneurs have a tendency to wing it. to become reactive, to say we'll figure it out when we get there, without proper preparation, without properly thinking through all the things that need to be done. And that can work sometimes. And when it happens, yeah, good for whoever got by without the planning. But it's not anything that an investor wants to play their bets on. There are cowboys out there who sometimes, make a big amount of money suddenly because they're in the right place at the right time. But it's not a high probability, and therefore most investors are looking for a very methodical, precise approach to doing business. And they want to see that in the business plan. They want to see it in how the business conducts itself. And they'll see this presented to them in what's called an offering memorandum or a slide deck that is kind of a summary of what is going on and how they're going to do it. And the greater the planning, the greater precision, greater preparation, the higher confidence level that an investor will have in an entrepreneur and in the business they're operating, because it shows that they know what they're doing, that they're coming at this professionally, that this isn't something new, it isn't a hobby, it isn't something they think they can do when they don't know if they can do it or not. This is serious money talking at that point. And that's what investors are looking for. They want somebody to appreciate and respect their money and to implement it, deploy it to make more money so they can get paid back.
Well, that makes perfect sense. And I think that's where the opportunity for an individual like you comes in, who is seasoned and has a lot of experience versus someone who just goes direct, right? Creates a plan and then goes out and starts shotgunning everybody out there, figuring, maybe a seed will find some firm soil and grow. But I believe an intermediary who is focused on that is key, because most people have a business idea or concept are typically involved in the business itself and not that experience in financing. And
it's there are many types of funding available for different stages of a business, from a startup to a more mature, well stabilized business. And most people don't have the time, don't have the capability of learning about all these different types of funding and when they come into play and what you need to do to get funding from them. As an example, I'll be meeting with some city economic development people later this afternoon on this dinosaur project. And they need certain things in order for them to reach into the city treasury and make some funding available, or maybe some tax credits or other forms of financing may be available. And if I can check all the boxes, then this is going to be part of the total capital stack that I can put together for this project. But the average person doesn't know, shouldn't have to know, because they need to be the experts on their business, not on raising funding. So it's a role that I play of trying to figure out what money is available, where it fits, what they may want to add to their business plan to make them qualified to match up with some of this funding. And it ends up, kind of being like a dating matchmaker, where you're trying to get two parties together, the source of the funding and the entrepreneur. But sometimes they need a proper introduction. Sometimes they need somebody to watch over them during the dating process to make sure that they don't mess up somehow.
Well, I think that brings to mind really understanding what your value propositions are to different groups. So in other words, if you're going to open up, let's say, a facility in San Antonio and bring in 200 jobs, there's a benefit to the community, to the city, that would justify maybe some tax benefits, maybe some incentives for hiring people. deferred situations because it's a competitive market out there. So Dallas is competing with Houston. Houston's competing with Omaha, depending on your geography, and having more enterprise value or specific added value than just investment value. And then I think it's short term versus long term. At a certain point, depending on your size, having an investment banker is a good thing. Again, with people who have the resources, have the credibility, I always had people coming to me wanting to represent me. And I actually worked with Pacific Crest out in Oregon for quite a few years. And that was always helpful because it showed they believed or confirmed a lot for themselves, because most of those relationships are just based on something happening, right? So you didn't have to pay a fee to stay in the family. You just had to have something that had some value or of some interest. At a smaller level, you can get the resources like Small Business Administration. You get organizations like SCORE, who have a lot of retired business people who are really good at what they do. Again, that's at a small level, maybe startup, maybe seed capital, and having a financial advisor with you who can kind of check some boxes, but more importantly, open your eyes to things you might not have thought of. Because I think the challenge most people have doing things independently, they overvalue something because it's theirs and because they are so optimistic about it. And at a certain point, you got to get a little temperament in there to say, well, here's the marketplace, right? You're thinking of you and them and the money, when you have to think of, okay, how many plans do they see every day? What's their incentive to get involved? So I think having at least another person beside you. Most people have banking relationships that might benefit them because they have connections and relationships, and naturally they want to see you grow, get bigger, more profitable, become a better customer. And that's where you have to really take inventory. Who has a vested interest already in me? That also goes beyond just the financial industry. And we talked on past shows about suppliers, customers, individuals like that who already know you, have experience with you. You don't have to do a lot of introducing. So, it is a full-time attention element, and like Karl says, if you do it here and there, it becomes a hobby, and just consider it a hobby and don't get your hopes up too high. But sometimes that's where really things start to happen. So, in all your years of experience, Karl, where do you see the biggest challenge to planning on most people's part?
Well, it classically starts, as you might expect, with recognizing what you don't know. Whenever you start a business, it's brand new, and you may be the world's leading expert on whatever it is that you're doing, that your innovation is going to take you in new places. But in the path that you have to walk from your idea point to getting it into the marketplace, there are all kinds of different things that you need to know, and it requires a team of people, starting with your core staff, and then adding a board of directors, a board of advisors, a team of consultants, who you use and as you need them, when you need them, but you need their knowledge and their expertise to help you understand what you need to do. What's the shortest path? What's the least painful path, which may not be the shortest path, to get from where you're at to wherever your successful goals are going to be. And a lot of people just start without knowing, without asking the question, without dabbling, so to speak, in the consultancy pool or the expert pool, and say, I'll figure it out. because I'm an entrepreneur, and they may, but it may take them too much time, or they may make an error that costs them money along the way. I'm constantly trying out new software packages, to help me do what I do in my business. And I would say probably 2/3 of them just don't work. I'm investing in my own capability, and by doing that, I can pass that information along to my clients and the projects I'm working with. And similarly, yesterday I was meeting with people who know this part of the country extremely well, who are giving me background and information that you can't get out of a book, you can't get off the internet. And some of it, it's opinion and observation, but nonetheless, it's valuable information. And so when you start, if you can start slower and try to identify all the types of knowledge and experience that you need to make your life a little easier, to improve your probability of success, that's a good first exercise to go through, saying, what if I had the A team? What if I had all the experts available in the world that I might ever want to have? Who would they be? What would they know? How would they help me? And I think it makes your plan richer, it makes it more durable, and it gives it, again, the best chance of being successful.
Well, that's interesting because there's so many elements to a quality plan. And one key element is timing. And timing's important because when do you need it? What happens if you don't get it? And are you putting yourself in a bad position because you waited too long and needed more than really is feasible? And usually that comes with an accommodation, right? Either higher pricing for, benefit, or, really understanding priorities too. So what is essential and necessary to get you to the next level? Some people try to finance too much too early, and it costs quite a bit. And you might find out that you have a surplus of money that you're really paying a heavy price for, or you didn't plan enough and you don't have enough to get you through the first trial or validation of it. And it's hard to go back for a second round if the first round wasn't successful. And so I think that's where a financial advisor can give you elements that one should consider and at least be on the same page. Plus, if you've never experienced dealing with investment groups or investors, you may go into it as if you're selling your product instead of selling the investment. And people don't really care how great it is. They're wondering all these questions that may not even occur to you, like what happens when you get hit by a bus? What do we do? What is the best, medium, and worst case scenario? And typically that'll show up in some projection to show that even if this and this doesn't work, we're still going to be okay, because people want to win. And I think, most investment groups have plenty of choices. The other big thing is chemistry. Is this the kind of group that you get along with, that you believe in? What's their track record? So, the planning is kind of twofold: what's on your mind, and what do you want to have on the other party's mind? And again, having somebody who's already have experience with groups, already have credibility with groups, because then you leverage off of their reputation where you may not have one. And I think it's always a matter of, in a lot of cases, friends and family in the beginning, right? And sometimes that's enough to get you off the ground. It may not be enough to take you all the way, but a lot of people will say, if no one cares about what you're doing, why would a stranger want to know that? And again, every situation is unique. You're going to get surprised because you don't know what's on their mind. They may be in the market for something that you have, or you could present and you fit a really good spot for them, or you could be a little bit, I wouldn't say antagonistic, but I guess it's also important to know, what do they invest in? How big of investments do they make? So if companies are just offering $100,000 financing and need 2 million, you don't even have to try to be convincing. It's probably not going to happen, right? So and we've talked about that before. Is some people will get a whole directory of venture capital firms around the country, right? You can slice and dice it and maybe come up with the sweet spot. But in the past, and it probably doesn't happen now, because people would get tons of plans, tons of brown envelopes full of plans on their desk. Some they may not even open. Now I'm sure it's just flooded with email or documents that get electronically transferred. But another thing, if you're a business person and your focus is on your business, how much time do you have out there in the marketplace anyways? And it's something that if you learn, it's not going to be an everyday skill set you're going to use, right? You go out for financing, you achieve it, you go back to your business and try to do business, where someone is always in the marketplace, always understanding what's going on. And I think the other thing Karl brings is he is at the forefront of change. There's a lot of legacy investors out there who are still doing things like they did 20, 30 years ago. And maybe it's worked. I mean, Warren Buffett, is not a spring chicken, but I guarantee you he's up on what's going on in every area, and primarily because he's probably got the best and the brightest going out there and figuring things out. So I guess core competency is important. How you handle yourself in front of people will give an indication of how you handle yourself in your business with other people. And sometimes what's important to you may not be as important to someone else, and vice versa. So how do you try to streamline the process so someone working with you doesn't have to invest a ton of time and can get more, let's say, relevant to their target earlier on?
Well, the first thing I try to do when talking to someone who needs to raise funding is to get a better handle on who they are, but more importantly, if their business, if their community project is successful, who's going to benefit? So as we mentioned earlier, if I set up this theme park and I do it in San Antonio and I create 200 jobs, which is a possibility, to the city the size of San Antonio, 200 jobs is good, but it's almost not worth talking about. Their economic development people would prefer to have Amazon or Samsung come into town with 2,000 jobs or 10,000 jobs. Whereas if I'm talking to a smaller community, such as I am between San Antonio and Austin, 200 jobs is a big deal. This would be a major part of their economic development plan. So even the same job has different value based upon the location in which the job is created. And then we go on from there. Are these going to be low pay, minimum pay type of jobs, or are they going to be higher skilled, higher wage type of jobs? So we started talking about job training. We talked about, in this case, robotics and pushing the envelope on robotics. So the values changes because of what we're doing and how we're doing it. And so as you are out there thinking about starting a business, you have to really understand who is the beneficiary, directly or indirectly. Is it going to be something that gets them up in the morning where they want you to succeed so badly that they're going to do anything to help you? Or are you just another choice amongst many, many choices? And it isn't that your value goes down, but to the person you're talking to, your value is lower, and therefore they care less. So talking with investor candidates is largely about trying to find those who you benefit the most, who will stand to gain the most and in their own self-interest, they're going to want you to succeed because it's good for them. And instead of talking to everybody with a million different levels of value, you want to talk to those who are going to get the most value and have the most reason to help you out.
Yeah, absolutely. And, again, going back to my experience, being a pretty significant retailer, sales tax was a big thing, right? So if you're going to go, and you're right, I mean, it was easier to have Lakewood compete with Arvada or Wheat Ridge because a couple elements was the job element, was the sales tax element, because let's say you're going to generate 5 million a year in sales at maybe 3%, that's $150,000. That's pretty much guaranteed income. And just like anybody else, they're investors, right? So if they give you an economic package that over 5 years is worth $500,000, they're going to have to figure out, did they get $500,000 or is there the potential of more? And the other thing is they're always looking to fill up real estate. So if you go to a city that has a couple facilities, 100,000 square feet that's been vacant, right? There's a benefit to bringing that. Plus, the kind of business, if you're a manufacturer, you're going to make a lot of capital investments in that property, right? And you're going to probably stay. As a retailer, you can pick up and move as soon as your lease is up, and that's the end of that. So, and I think that most people find a lot of in their mind that people are trying to get some competitive situation where most cities are pretty open to what they're looking for, what they can do, how they can do it. If you can fit the criteria, you're a good candidate. And I think the local level is where a local company has to start. Now, if you're Tesla and you decide I want to put a battery plant somewhere in Colorado, you'll be dealing with Colorado because they want to see naturally their state flourish. There's probably some competitive advantage. I know California and Texas are always going at it. Right. So a lot of people, because of tax situation, because of labor cost between, who's out there. So there's so many elements that someone doesn't always take into consideration. And I'm sure there's people who set up a business on their own, don't go to the city, don't go to any economic development organizations, and they miss out. Believe me, if you go out and make a big investment in any city, they love you.
That's right.
I mean, and if it didn't cost them anything, they love you a little bit more, but then there's a question mark as to, weren't you aware? So, I think there's friendly mechanisms or organizations that are on your side from the beginning. If you can fit their bill, they'll figure a way to help you. And if not, your market value, right? So if you went to every city and everybody says, no, I don't like it, well, that's a question mark that maybe you have to wonder, why is that? And, the other good thing I found is rejection, if it's a good, honest rejection, has its response or its feedback, right? We love to have you here, but, and if you can figure these buts out, then come on back and we'll talk some more. And then everybody has banking relationships. Everybody has legal relationships and accounting relationships. And sometimes, especially if you're a stranger in a new town, you don't have that ability to network and have someone be a guide. I remember my earlier days, I was such a huge newspaper advertiser. And we ended up expanding into Milwaukee, and the Milwaukee Journal gave us a driver, took us to all the real estate places because they knew what kind of marketing expense we had. And they saw that as an investment. So, there's ways to get money that are not always traditional, but they are available. and then having people to say, well, let's check this box, let's check that box. And you feel better because people have then earned their fee, right? I think that's the challenge. Most people are penny wise and pound foolish. And they say, well, if we can get by with a lower cost accounting firm, if we can do our own prospecting, if we can do this, we're going to save all this. But that's assuming they're going to be getting the same benefit. And is that your core competency? And do you want to work on it? But I think when we get into planning, it is the nuts and bolts, right? You have to deal with cash flow. You have to deal with balance sheets. You have to deal with liquidity. I mean, and all these elements will show you how you are able to be responsible for the money that you're getting. So, Karl, I know this is a fascinating topic, and I know planning to a lot of people is, oh, that's just time, effort, scratching my head. And there's a lot of people who don't have a clue either. So now they got to create something with, it's like that build it and they'll come type of approach. We'll throw it out there, and if it works, great. If it doesn't, well, we'll throw something else out there. And some people get lucky, right? I mean, they just somehow it just happened, and other people who shouldn't have to get lucky don't get lucky. Is they had a great plan, they're great business people, but somehow that plan didn't communicate it properly. So, as far as documentation and due diligence, and that's usually what most investors are looking for, right? Is everything here making sense? And is this something that's sustainable, to make those decisions? So how does that come into play?
Well, you're trying to tell a story that's like writing a book that has many chapters in it, and at some point, the author is going to finish the story. He's going to wind it up, and the book will be over. Your business kind of follows that same path where you're saying, I'm starting over here. I'm going to go through these different steps. And at some point in the future, we're going to call it a day. It may be the termination of the business. It may be a sale of the business. It may be something else. But this is where the investor gets their money back. And the investor wants a reasonable expectation that sometime in the future, if they give you money today, they're going to get their money back in the future, and hopefully more money than they put into your business. And so when they're looking for a crystal ball, they're trying to look into the future. No one can predict the future perfectly with accuracy, but if they see a plan that says, here's what we're going to do, and every part of the plan appears doable, and including the growth and adding people and expanding the products into new markets along the way, they get more comfortable that this person is the right person who can take their money and work it hard and give them back their money then sometime in the future. Without that level of detail, they don't know what the person is going to do. They cannot assign a probability of success or get comfortable that the business is going to be everything it can be, and not enough to pay back their money. So they're like, I'm going to take my money somewhere else. I'm going to find somebody who does love planning, who does love detail, who is willing to share and show that they're thoughtful and considerate and respectful of the investor's money. And one of the ways of being respectful is to say, hey, look, here's my plan. I've detailed it out as best I can. Here's all my assumptions. Here's everything that went into my thinking. And it looks pretty good. Looks like we have a good chance of making some money and sharing some of that with you, Mr. or Mrs. Investor. And that's what they're looking for. For somebody to throw an idea on the table is, look, the market's great. I go, yeah, but what's your ability to create a product? What's your ability to bring it to the market, make the market aware? What's your ability to move faster than your competition? If you don't answer all those questions, The investor doesn't know. They can't assign a value to it. They're pretty much assuming you're going to do that for them. And if you won't do it for them, they don't think you really understand or appreciate their money.
Yeah, those are so important points. The other thing I think one has to be conscious of is industry. And some have a headwind, some have a tailwind. I remember some companies, we invest in this, this, and this, but no retail, So, it's like, well, you're the only one they don't invest in a way. And that makes you wonder, well, it must be the e-tail business that everybody's investing in, right? And has a higher premium. So it might adjust your focus to include what is hot versus what's cold and see how that works. The other thing, let's introduce Catherine Hall. Catherine's from the high desert, which if you want a city is Los Lunas, New Mexico. I've talked to Catherine years ago and she's involved with horses, raising horses, training horses, and also a publicist. So welcome, Catherine. Dennis is here. Dennis is our tried and true, agree getting advice and teamworks. Plus, we can bank on our connections, directions. Well, Dennis, you've been in business for 49 years. I know there must have been opportunities that you needed capital, even if it was just bank capital and not really investor capital. So love to hear any experiences or topics you might want to share. And, I think, some people look at raising money as troubling. I always enjoy just the conversations, just the feedback. And again, it depends on what level. There were times I do road shows and we just go up and down, California, Silicon Valley. They'd be bumped up against each other. You'd have an appointment here and 10 minutes later, you'd be over there. You'd be in a boardroom. You'd usually have 7, 8, who knows how many people. You'd have a main person, usually the founder or somebody who was interested, and you probably have someone who engineered it or brought it to the table. And there was always a format, right? In other words, you knew you had 50 minutes. You knew who was responsible for the numbers. You knew what to say. You were with a managing partner or a director who would meet you there with their person. And then you'd have time before the presentation. Then you'd have time after the presentation to go over kind of what we did right, follow-up elements. And I think being responsive in the moment with whoever you're with, but also responsive right after it. Because the rule of thumb is if you don't know, don't say, right? If you got to guess what the number is, it's easier to say, let me make sure and I'll get back to you with it versus just some pie in the sky, this and that. But again, we're at a different level when you're working that point. But I think it's important to just, with today's information on Google, on YouTube, you can learn so much on your own to make you conversational with someone like Karl. And it's better for someone to already kind of be tempered than to go in with some Wild West ideas and someone coming and telling you that's not going to happen or that's totally unrealistic. And I guess that applies just when people sell businesses. It's the same thing. But, understanding there's parties to this. That you winning and the other party not seeing a win isn't going to make you a winner, and understanding what other value benefits they bring besides the money, connections, strength in the industry, people that can come on your board and give you that extra lift, and probably getting people you wouldn't have been able to attract on your own if it wasn't for their investment in it. Dennis comes back and says lines of credit with your local banks work for me. And, usually lines of credit can also be based on assets, right? So having an asset lender who can say, well, I'll lend you 70% of your inventory, or 80% of your receivables. So something that's tangible, something that's attachable. And the key to there is liquidity, right? If you have an inventory that's 30 years old and obsolete, it's not going to have any value. If you have receivables that are beyond 90 days, that probably won't have any value. But I think that's where, being an open book, right? And then sharing everything for what it is, because the other thing I know doesn't work is surprises, good or bad, right? It's like, well, we'll get in and know them, they'll get to know us, like us, and then boom, by the way, we've got all this litigation, against us, or those uncertainties. And all of a sudden, a good deal just became a good waste of time. And, it wasn't going to work. And sometimes your fear may not be as great as the reality of the fear, because every business has its issues. Every business has what if situations. And most cases, it's just a discount if you're lucky. Well, because of this, we're going to discount this 20%, or we're going to need more capital in, or what are you doing? And I think that's a key element. Going into an investment group and saying, I need 200,000, but by the way, I'm paying myself 300,000 a year. And they're going to say, well, why not use your own money, which is taking less of the company's money? Because at the end of the day, or not totally the end of the day, it's what's your burn rate, right? If you're profitable and you're cash flow positive, you're less of a risk factor than if you're going through 30,000 a month and you're looking to borrow $500,000. If you don't turn around, it's not going to happen. And not only that, when you leave with the check, you're going to end up, they're coming with you, like it or not, and you're going to have to run it and do that business. And hopefully, because it's your business, you want to stay there. To an investor, unless it's like all or nothing, well, you're one of 10. They'll live with or without you. And that's another consideration is, are your investors short-term? Are they long-term? Are they going to cash out as soon as they get the return they want? And then what does that do for you? And then it gets even worse if you do worse. It gets multiple times worse, because then you can get a capital call, right? You need money. Well, what are you putting in? If you don't put in, there's a chance of dilution. Plus, the fun goes away at a certain point too. So these are all considerations. So I would say need less, be able to get by if you don't get the money, and live to play another day. And sometimes you got to go back to the table, right? You just got to say, okay, listen, how can I squeeze a little here, do a little here? Or in most cases, or some cases, say, okay, I know what you need. When I get it, I'll come back and we'll talk again, right? And that way, everybody's still got a semblance of a relationship. And if nothing else, it tells you what you should be doing anyways. If it wasn't for them, you should have probably been doing it for yourself. So a lot of soul searching, a lot of looping in your minds. But it is fun when you do, and we're talking about people are challenged when you have something really going good, right? And the reason you need money is not to survive, but to expand, right? To leverage, to take advantage of it. So you already got the runway. You already got off the runway. Now, how fast and how high can you fly? And that's something that most groups don't always see, is everything is checked off. And that's when it gets competitive, right? So if you are hitting a sweet spot all over and you only need one investment group, you can probably get a premium, if not in price or valuation, but in support. So what's your thoughts to all these different opportunities?
Well, when you're talking to people with funding, they all have a minimum expectation that they're going to get their money back. Anything less than nobody invests to lose money or with the expectation of losing money. And so it seems strange at times, but I have people come to me and go, I want to open a restaurant. I go, great. What's your experience in running a restaurant? Well, I've never run one before, but I always thought I would, want to own my own restaurant. I go, great. Well, have you ever been a cook in a restaurant? You go through all the job positions. Nope, never done any of those. And so I said, so what do you need? Well, I need enough money to buy a place and so on. And then you're like, well, do you have to own the property or can you lease it? Well, we could probably lease it. And do you need to own all the kitchen equipment or can you lease that? Well, I could, but it'd be really nice if I owned everything. And you're at this point, you're starting to laugh at them because you're not being very realistic because that isn't the way professionally anybody does this. But investors don't feel that, as I call it, they don't want to pay your tuition for you to learn a business that you don't know anything about. If you need to learn, then you need to team up with someone. You need to work through their back office or front office or be on the ground with a business and gain the experience you need before you can take the leadership over of a new business. And the fact you led a company in real estate development doesn't mean that you're qualified to run a restaurant. Those are two different niches with completely different markets and ways of doing business. So you really want to know what you're doing. You want to surround yourself with people who know more about different elements of what you're doing that you don't want to be the expert or guru in. And then you plan it out so that everyone that you need is identified and qualified, and you have a path and they know what they're supposed to do to get you from where you're at to where you want to go. And it seems like you can never do enough planning, but at some point you do have to start and you have to move forward with a bit of a compromise on what you know versus what you don't know. And you try to learn more every day so that you continue to offset, as you say, move into the asset category. What you know is greater and greater every day, and what you don't know gets smaller and smaller as you work through the implementation of your plan. But no plan's perfect, and every plan will have flaws or gaps in it because things will happen you didn't know or couldn't expect. And everybody's going to be okay with that if you did a really, really good job of planning. But if you did a poor job or no job and you fall down, everybody's going to kind of look at you like, well, what'd you expect? Do you think that you're entitled or privileged or somehow otherwise supposed to win automatically just because you decided you wanted to do something? And the world's not going to be that friendly at that point for people who don't plan, but those who do plan, you'll often find somebody around who will help you to your feet, get started again or start a new business because they thought that you made a good, hard effort to do it right and do it in a way that would cause the most benefit, but also cause the least harm. So if you do fall down and something goes wrong, everybody thinks that you took appropriate precautions and did the right thing. And that's demonstrating respect for the people you work with and the community you work in and for your investors.
Well said. We've got Dave Snell, who's part of our cohort group. I'm so proud of Dave for the progress that he continues to make, and he really is getting to focus on the private investigation element of his business, cybersecurity. Can't wait to talk to Dave to hear latest updates. So thank you, Dave, for all your support. And, I also see that commitment is so important in your plan because like Chick-fil-A, they only work with owner operators, right? So unless you're going to go into that restaurant every day and work it and work your people, they understand the difference between an owner operator and an investor operator who's now going to get a second tier of management who's going to do what they should be doing. And really keeping your eye on the ball, like Karl has said. The other thing is, once you make a plan, the commitment to that has to be serious. Because what you don't want to do is borrow $500,000 to open a retail location and then find out, oh, I want to be in manufacturing next week. And I'm sure there's covenants and caveats that people have to follow. There's ratios, that you have to maintain, before you hit the red line, which is you got to have so much of this relative to that, or, your reporting has to be up to date. I think the key is that has a string through all of this is communication from the beginning of presenting to hopefully closing a financing to then begin the communication as a team now where, when you initially start, it's you against the world. Your focus is yourself and your company. You have to switch that focus when people come into the fold and understand they paid a price for their seat at the table and their money's in, right? And some people respect that and some people take it for granted. But, everything you do either promotes you or exposes you in time. And people are pretty savvy who have done this for quite a bit, and they can relate to, okay, well, this looks like it's going to turn out like that did, or they're going down this road and I know where this typically leads. And, there is something beyond the money that people want to feel pride in what they invested in. They want to distinguish themselves that they saw the needle in the haystack when no one else saw that important element. And I think, you want to make life easier, better, and like I say, on the other side, there's investments that people just can't believe the returns are getting, and if you look at, I saw where Jeff Bezos offered people in his family shares in Amazon when it went public. And if you would have put, I think it was $10,000 in, you would have got $1 billion worth of value. And not only that, but you'd have a brother or a cousin who now has 200 billion. So even if you didn't make the investment, I think you wouldn't be without food or clothes for a while. But that's what makes winning and investing so important is those bigger wins, the once or two or three times where you hit that grand slam, not just a home run. And I think you get a lot better at it, over time. And at a certain point, doing more with less players makes more sense, right? So if you can get something that you can continue to support, continue to reinvest in, assuming that it's matching all your criteria and overperforming. One thing I will say, there is no lack of money out there. Good times or bad times, for the right investments, for the right individuals, money's always available. And at the lower end, it's probably never available. So it's not like spin the wheel and see where you come up. And there is a science to it as well as a creative element to it. Sometimes you're your own best friend or worst enemy when you get in front of people. And maybe if you would have said less and said more about something else, and then you always have personality. Well, they just said something ticked me off, or they may not even know what they said, but it's adverse to me. And it's all that. And I think the key is don't put yourself in a time situation that it's all or nothing if you don't get it. Give yourself an opportunity to play the field, it's like dating. First person you meet may be the best, but, until you really get out there and talk to enough people within reason, do you now have a ballpark, right? It's just like if you had a car and you wanted to sell it. After 5-6 dealers, they're going to pretty much be in a certain area, and that's what it's worth to them. If it's worth more to you and you think you're giving up too much, then don't do it. No one's forcing anybody to do something. And hopefully the money makes the difference, right? That becomes the key that unlocks the opportunity that you've been working on or dreaming about. And you have to be grateful because they put in all they're going to put in at the beginning. Now you got to go to work to match it with your performance and your effort. So, it doesn't have to be drudgery. It doesn't have to be hard work. It can be a lot of effort, but it can be pleasurable if you have the right mindset, if you go with the right perspective, if you're with the right interface or intermediary that really acts to kind of make you appreciate more, right? Well, that's great, but on their side, here's what they're thinking. Here's what they're looking for. If we don't really consider that, we're not doing them any justice, and we're probably not helping ourselves either. And it's what you do with the money. You don't make any money by when you get the money. You have the opportunity now to use the money to make money. But to say, hey, I really scored, you didn't score nothing, because now you got to go to work. Like I say, when the check cashes, you're stuck with whoever wrote the check. So Karl, we finished an hour and I didn't even know it. I guess memory lane really takes a little longer than I'm used to. So what's your final thoughts on this conversation? And love to hear them.
Yeah, so planning is the topic of the day. I'm on a 3-day road trip, where I'll be in 6 cities in 3 days, talking with many different people. And I created a plan just for this trip. It's like 20 some pages, because I had something I wanted to see, things to learn, people to meet. I had to sequence everything. And that's without taking into consideration I had to move the trip a week after I had it already halfway planned. So planning is important, because putting stuff on paper at the very beginning and then talking to your associates, your experts, even investor candidates will help surface things that you might not have thought of that may be very important, and getting those on paper. And that's the first kind of level of communication. That you say, here's my great idea, and everybody goes, I don't understand, then you're a long ways away from where you need to be. And then when you then share that with your team or people that you want to recruit onto your team, and you're dependent upon them to do their part of this, it's like running a relay race. Well, if you don't have that third leg standing ready to take the baton's not going to move from the second leg to the fourth leg of the relay race. It just stops at that point. And this is where a lot of businesses have a problem, because they didn't anticipate or prepare for something that should have happened, that was everybody expected to happen. And so no one's accountable for it. And all these things then go together, where you're talking to an investor, says, we have one more thing. We need some funding in here to be the gasoline to go into the car so we can drive it down the road. And the investor wants to see a whole car, where the only thing missing is the gasoline. They want tires and windshield wipers and everything there. This is your plan. It's telling them that you've thought through all this. You have all the knowledge and experience wrapped around this. You have the people with the skills to do it. And you, by thinking through it, you are heightening your ability to execute on the plan, understand the plan, knowing what you need to do. And this all contributes to you getting where you want to go, doing what you want to do, and enjoying the ride, as opposed to it being a daily war where you're fighting stuff that you didn't plan or prepare for. So planning's important.
Yeah, for sure. Well said. Always appreciate Karl, especially with his knowledge and his ability to simplify a lot of what's complicated to a lot of people, which is important. Keeping it simple is always easier. Saying less and meaning more means more. I was really at a group that really tried to help you package your presentation properly. And one of the first exercises was define your business in 5 words or less, right? And if you can do that, then you've really focused versus just scattershot. So there's so much more. There's so much more even people like Karl are learning every day. So to stay relevant, having somebody like Karl is so valuable because you don't know what you don't know. And that's always something that's true. So with that said, thank you, Beatrix, for being here. Another YouTuber. We had 2 YouTubers today. Thank you. Thank you, audience. Come back tomorrow. We're going to have Kelly and Dave Snell together. What a great group, focusing on strategy. With that, I'm going to thank Karl one more time in the audience. Come back in 23 hours and we'll do it again. If you have any questions or thoughts, feel free to reach out to me or Karl. Glad to hear your comments and respond to them. So thank you very much. Have a wonderful